Alright, sorry about that. I don't know what I was doing. I just took a sip of water, but hello everyone. We are back with another video. This will be a review for I didn't see the date. Let me take a look here. It's not actually showing me on my phone. Okay. Wednesday, November 12th, 2025. So I just wanted to talk a little bit about the day and kind of what I saw and what I was watching ahead of price opening. So initially at the open, it's not too hard to see what we've been doing. Oh, look at this. Lower end of the new week opening gap. Just pierces through it, falling short of these lows, but filling this fair value gap. Okay. Rejects. Well, it finds support. Alright, basically. Flushes out these highs. We see a short retracement immediately, rebalancing, forming the low of yesterday's PM session. And then we consolidate into right before Asia, where we take the upper end of the range, retrace, and then we're up higher. So now we're forming higher highs and then higher lows. And essentially, that's what's going on prior to the open. So at the open, we are currently trading up into some bearish PD rays and then some daily. It's a daily, I believe, premium wick. It doesn't really matter. But if you go to your chart, you can see this wick. And this fair value gap aligns exactly with the quadrant level. So when the consequent encroachment of a daily wick aligns with the consequent encroachment of a fair value gap, this is probably a 15-minute gap, I believe, maybe a 5-minute. It's pretty high probability, and we fill it literally. Alright, I believe this is pretty volatile, so I'm just going to consider this, if we, I mean, maybe I can do it like this, but I feel like this is a little bit cheating, but, okay. When you do it like this, it very much overruns optimal trade entry, so yeah, it's besides the point. I just thought I'd look at that, but anyways, this is just the technical analysis I was doing before, and I didn't grade this out at the time. I just kind of assumed this was optimal trade entry, which, see, now it wasn't. But so my bias was actually going to be bullish. However, it was this draw. There's another draw up here, but this draw, and then there's another one, I believe, or maybe it was just these two. I can't really remember, but clean draws, like I just assumed these would be taken, then we'd go lower. And, I saw we had some liquidity kind of just resting through here, all low resistance, and I just kind of figured we would flush it out. However, with the trend in mind, I was obviously going to be having a slight bias towards longs. So basically, my bias for today was about 60% longs, 40% bearish. So obviously, it was bearish, but I was able to flip my bias very easily. And the way that I did that was through, we go to the 1 minute here, because you're able to see this perfectly on the 1 minute. Alright, we're in Asia right now, so let me scroll back over here. Alright, here we go. So prior to the open, we form a little order block, nonchalant, just, and this right here, I'm telling you guys, this, you grade this out right here, with this order block. The fact that we don't even touch into this order block, which is resting just above consequent encroachment, and the fact that all we do is just tap into this quadrant, it's telling you that this inefficiency is willing to be left open. And we even have this order block here, this change in state delivery. I'm telling you, this is telling you it's going to go short. So I pretty much knew we'd be going short, but I was sort of expecting it to go up into this, and then we would sell off. So whenever we wicked up like this, I was watching this candle paint, and when it was bullish like this, I was like, oh my gosh, it's about to be game on. We're getting ready to open. This is what we're doing. And then I open and I see this. And then I see this. Immediately, alright, this is it. In the first 2 minutes of the market open, we dumped a total of 87 points. Okay. Alright, and now I'm not going to do the time anymore, but in the first 20 minutes, okay. Hold on. In the first 20 minutes of market open, alright, not even, we dumped 183 points. Alright. And the closest thing we got to a retracement was this. First percent of fair value gap, you exclude 930, tap into it. Alright, grade this out right here. Okay, little easy thing to do. What? all we're doing is tapping into this with one candlestick. We don't even have like a little bit of a range, and then no. All right, so if anybody was able to short this, okay. Actually, I don't want to say they're a madman. I don't, because there are some people that look for this sort of stuff, and then they short. All right, but if you saw this and you shorted, congratulations, honestly, just because you're locked in. All right, that's just how I see it. But the trade of the day was essentially if you were to be pretty locked in. All right, this is the trade. All right, and then I'm simply just gonna tell you though, I didn't take any trades today. I saw this. I see this. I'm done. I think it was somewhere right there, but I see this. I'm done. We inverse these two gaps. All right, notable. Expected a retracement to this gap. These overlapping of these gaps. No, nothing. But the trade of the day was we keep dumping. We keep dumping. As soon as we take these PM session lows, right? And then we see a retracement. So it's like we took liquidity on the higher time frame. This is just a wick, so it's unfinished business. We need to get a strong close below this. So you have this fair value gap. All right. So a lot of people, okay, are going to want longs right here. This is the thing. If you're trading ICT, you want longs right here, right? But this is actually a formation of a breaker. So I'll explain that in just a second. But it's actually a bullish breaker. So I'd like to make that clear. But the thing is context, okay? Context. This is also a bearish breaker. But give me 1 second to explain. Bearish, right? Fair value gap. Inverse. Okay, longs. This is longs. This is the problem. No displacement here. There's no displacement. And the only reason is because if you tap into, this is why gradients are so important, and consequent encroachment is such an important theory. This is because every PD array has discount and premium sensitivity. So whenever you trade up into the consequent encroachment, you wick up into the top, okay? And then you immediately retrade lower, tapping into this gap, and then you don't, if this next candle is not closing somewhere in the top quadrant, that's the minimum that I would want to see to get along here. Then you see a wick up, we close around consequent encroachment, not good. Close, we wick up, make us think, okay, we're going long. No, fall back down. Tap into this gap, body's respecting this gap. Okay, so guess what? You can long right here. This is an acceptable long. The only problem is you target here and you go to break even. Okay, guess what? Your entry would have to be picture perfect, and you would have to literally predict. You would have to predict, all right, this candlestick. If you saw this candlestick, your trade's done. You don't have a good entry. Okay, so, and everybody, you want to see respect. You don't see this in the long instantly. No, it wouldn't work like that. Especially considering this. Don't get too excited. We've been literally barely respecting the PD arrays all day, leaving inefficiencies open. We have so many unfilled gaps. The market's left them so unfilled. It hasn't tried to take anybody out of the marketplace except for people who are trying to profit on longs, long term, longish term. That's a telltale sign we're going short here. All right, so we're just gonna hunt in here through fair value gaps. Okay. Ooh, here's one. Really small one. Bullish for value gap, but it doesn't matter. So bullish for value gap. By the way, all the PD arrays get respected if you're bullish. So the second you see this, exit your trade, brother. Exit your trade. If you're doing this in a gap, when you leave it, you want to return to the upper range of it. Don't go below the upper quadrant. No. Go through it, inverse that gap. Alright, so now this is, alright, low, high, lower low. This right here, guess what this is? The move right before this is a bearish breaker. Essentially an order block, but it just is a little bit stronger. Oh, what's this? Bodies stay in the lower half. Bearish breaker. Bearish breaker staying in the lower portion of this fair value gap. Oh, hold on. Tapping into this gap with this order block. At the opening price, the most sensitive point of an order block? What? Hold on. Oh, okay, it actually didn't tap into it at all. I don't know what to say about that actually then. It's not nearly as cool. So what, we have two confluences. This third could be selling. Maybe look for an SMT in here. Okay, that's gonna be the last thing that I check. In this little move here. Why is it so zoomed in? I don't even know what's going on. No, we've kind of been. Maybe this is a. No, it couldn't be. I don't know, but we pretty much rose above this gap. But yeah. So I don't know. NQ was definitely a lot more bearish, but S&P was more bullish. I think I acknowledged that today. But then you could just take shorts to this low. Right? This is shorts somewhere in here after the inversion of that small gap up here. You could short. Expect a retest of this. Expect to see a close above your bearish. See close here. Your stop loss could be like right here. Okay, if you were going to be putting a position on, this is how I would do it. Short position following the inversion of this gap. So, you know, you expect to get in sort of somewhere like just around there. All right, maybe not that great, but I have magnet mode on. I'm not going to turn it off. Just above the fair value gap, a couple points. All right, you take to this low right here. Boom, that's your move. Because that's the minimum that it really has to do to see it deliver. So that's anyways. That's how you could catch on to that. It's difficult to acknowledge when you're looking at it like this. You're like, whoa. But I wasn't even on the charts to see this. I just will always acknowledge this stuff after it happens because that's what I do. That's how I'm going to grow and improve upon myself. But anyways, yeah, rule for me, we drop more than 100 points out of the open first 30 minutes. I'm done. I don't hop in because it's never a manipulation leg. It's always a fucking what is it? It's always a distribution. So that means accumulation. And then if you look, ooh, we dump. This is the only trade. Catch the lower end of this leg. Dump lower. Stop run. Stop run. Just rise higher. Start consolidating. This is literally nothing. This is you might not even be able to consider that a stop run. Just consolidate, drop down, one last little part, you know, forming some relative equal lows, high probability draws right here. Right gaps everywhere right here, rips higher, and that's that. So, anyways, I don't have a lot to talk on today. There's not a lot that I want to talk on, but you know, yeah, I didn't trade today, but I still took a lot of value out of this day. I literally introduced that rule to myself. This is some people, this is their best days. It's not mine, and I'm not trying to be them. Anyways, if you guys did watch, thank you so much for watching. I appreciate your time, and future me, whenever I watch this, and really everybody watching it, good luck and good trading.